Hello people, so welcome back after that break. So let's continue our revision discussion. So next we are revising accounting standard 20 called earnings per share, EPS. So again, EPS is just a number you calculate and report in your P&L. In your P&L account, no, the last item you will disclose or you'll publish is earnings per share. So there is a certain way to calculate this that you need to calculate and publish in your P&L at the end. Okay. So as far as AS 20 goes, there are two kinds of EPS we calculate and we report. One is basic EPS. For class purpose, we'll call it as BEPS. Another one, diluted EPS. For class purpose, we'll call it as DEPS. BEPSO. Basic EPS, diluted EPS. Again, it's an out and out numerical standards. You do get calculation wise questions from the standards. That's the usual way of asking a question from here. Okay, so let's go further. Standard ka name is earnings per share. So you have to calculate earnings for one share. How do you calculate earnings per share? Total earnings divided by total number of shares. So the calculation is yes. When you try to interpret the formula, it will come like that. But here, basic EPS is given by the formula, not earnings. Each. What? Each. Earnings available or earnings attributable to equity shareholders. Numerator is not earnings, it is each. Denominator is not total number of equity shares, it is weights. Weighted average number of equity shares. Each upon weights gives you basic EPS. Okay. So it is not earnings, it is earnings available to equity shareholders. Why? Sir, we report or rather we calculate and report EPS only for the equity shares, not the preference shares. Hence, we don't take total earnings, we take earnings available to whom? Equity shareholders. Hence that way. So how do you get earnings available to equity shareholders? Is profit after tax available to equity shareholders? No. From profit after tax, you have to pay preference dividend. So from PAT, as in profit after tax, if you reduce what? Preference dividend, you'll get a number, no? That number only we call it as what? Each. Earnings available to equity shareholders. Earlier, there used to be dividend distribution tax concept also. Now it's abolished, so this may not be relevant. Some 7-8 years before, if you see some questions, dividend tax adjustment also used to be there. Hence, I have brought in this. In today's context, this may not be relevant for you. Okay. Alright. So you got how to calculate each. Denominator is what? It is a number of shares or weighted average number of shares. Weighted average number of shares. For class purpose, we are calling it as weights. Don't use short forms in exam. It is only for the sake of easy remembrance is all. Now, why do we take weights? Because a company issues shares. There are, let's say, two companies. Let's take a simple example. There are two companies. Both the company wants to issue new shares. Both the company wants to issue new equity shares. First company issued the shares on the first day of the year, 1st April. Company number 1, they gave new equity shares when? On 1st April, meaning the first day. Second company, they issued new equity shares on the last day. Both are worth 10 crore rupees. New equity shares is worth how much? 10 crore. Which company will earn more? The company issuing equity shares first or last? First or last? First or last? First. Why? Sir, if you issue the shares on the first day, company will get money also on what day? First day. That means they can utilize this money for the whole year. If company issues shares on the last day, they will get money on the last day. Can that money be utilized in the current year or cannot be? Cannot be. That means earnings is influenced by the time of what? Time of issue. Correct. Now, if you issue on the first day, you will earn some money. If you issue on the last day, you will earn same money or lesser money? Lesser money. Since earnings is affected by time, in the denominator we don't take total shares, we rather assign weights in what? Time. Since earnings is affected by time, the denominator also should be expressed in time. Hence, we don't take total number of shares, rather we take weighted average number of shares. Because to compare numerator and denominator, they should be on the same platform. No? So if this is affected by weights, this should also be affected by weights. Hence we take the weights out there. Done, Aji? And give you another example in regular class. Now I'll not go in. This makes sense what I said just now? Okay. So how do you calculate weights? Sir, weights are usually assigned in months. We give the weightage in months. 1 by 12, 2 by 12, 12 by 12, like this. Okay. But sometimes if they give you odd dates, like shares are issued on 22nd April. Shares are issued on 22nd April. It's can you easily express it in months, or it's little odd? Little odd. In that case, you'll give the weightage in days. Okay, if they give first day or midday or last day, 1st April, 15th April, 30th April, like this, if they give you the data, we will give the weights in what? Months. If they give odd dates, 10th April, 15th April or 17th April, like this, then we'll assign the weights in days. But days wala weightage problems are very, very rare. We don't see it often. In majority of the problem, weights will be assigned in what, sir? Months only. Okay. There are two ways to calculate weights. Both will give you the same answer. You can use any of the two. One is an individual approach. Another one is cumulative approach. Individual, another one cumulative. How it works? Let's look at a small example. Okay. They probably don't like the example. Huh? On 1st April, I'm more worried about the costing class happening there. Please, this is marathon. We still somehow can manage. Papa, that side regular class is going on. I don't know how they are managing. Okay. I think this drilling work, no, I think me and drilling work goes hand in hand. Last time when I did in Bangalore also some drilling work was going on. I think before that also there was some drilling. Third time this noise is me and noise are going hand in hand. Wherever I go, probably noise follows. Okay, that means looks like I only have bad vastu. Okay. See, they're agreeing. I don't know whether this is getting captured or not. Maybe it's available in recording, that I'm not sure. Okay, people. Let's say on 1st April 2024, company has 1 lakh shares. Or company issued how many shares? 1 lakh shares. Again, 50,000 shares was issued on 1st October. So 2 times in the current year, shares are issued. One's on 1st April, another one on 1st October. Now we can we take 1,50,000 shares for EPS calculation or assign weights? Assign weights. Any odd dates you are seeing or perfect dates? So we will give the dates, we'll assign the weights in days or months. Months. How do we do that? First, let's try individual approach. Individual approach is like this. 1 lakh shares was issued on what day? 1st April. That means it was there for the whole year. Whole year has how many months? That means on this 1 lakh shares, how much weightage you will give? 12 by 12. That's all, or even one more is there. 50,000 shares came when? 1st October. That means this shares is only available from 1st October to 31st March 2025. Count October, November, December, Jan, Feb, March. How many months? 6 months. That means on 50,000 shares, how much weightage you will give? 6 months. So it will be 6 by 12. If you add up, you will get the total weights to be how much? 1,25,000 shares. This will be utilized for our basic EPS calculation. This is one way of approaching the weights, which we call it as what approach? Individual approach. Another approach is cumulative approach. You can follow any one of the two. Cumulative approach is like this. Sir, listen to my sentence carefully. From 1st October till from 1st April till 1st October. From 1st April till 1st October, company had 1 lakh shares. Do you agree with me? After that, number changed because we issued extra. Do you agree? Once again, I'm going to tell from 1st April till 1st October, company had how many shares? 1 lakh shares. There afterwards, they issued 50. So the number of shares will increase. So count from here to here. Count how many months? April, May, June, July, August, September. 1st October, you leave. How many months? 6 months. So for 6 months, company had how many shares? 1 lakh shares. So you take 1 lakh into 6 by 12. Done now. From 1st October onwards, company has 1 lakh shares or 1,50,000 total shares. Cumulative means total approach. How many total number of shares is now available from 1st October? 1 lakh plus 50,000, which is how much? 1 lakh 50,000. Any more transaction happened or that's all? Means from 1st October onwards till end of the year, company had how many shares? 1 lakh 50,000. So from here to here, you count how many months? October, November, December, Jan, Feb, March. How many months? So for the next 6 months, company had how many shares? 150. Calculate. When you sum it up, how much are you going to get? 125. This also gave 125. That also gave 125. Whichever way you want to calculate weights, you can do it. Whether individual or cumulative, both are acceptable. This is your weights ka drama. Okay, ji. There are 4 to 5 types of questions usually that gets targeted from this particular chapter. Bonus shares, right shares, something around diluted EPS ka couple of questions, and one more discontinued operation ka questions they ask. Usually they play around with this 5 questions. Okay. Based on time, we will see how much we can cover. Can we start with the first type now? Called bonus shares. Called what, sir? Bonus shares. Sir, bonus means OC. OC means free. OC I think is same in every South Indian language. Free only. No? Tamil lo kuda adane. Free dane. Okay, same. Everywhere I think it is same. So bonus shares means additional shares given to existing shareholders for free. That's all. Okay. Now we are trying to ascertain how bonus shares has an effect on EPS. Okay, Jay. Now, sir, why do we assign weights to the shares? Forget about bonus. Why do we really assign weights to the shares issued? What is the thought process behind that? Sir, depending on when you receive the money, on shares, your earnings can increase or earnings can reduce. Remember that company 1, company 2 example. Company 1, when did they issue shares? First day. Company 2, last day. Who will earn more? Company 1. Why? They receive the money early. Yes or no? But bonus shares, when a company issues bonus shares, company collects money or no money? No money. That means, honestly speaking, should we assign weights to bonus shares? Is company getting any money from bonus shares or no money? No money. So in one sense, if you analyze bonus shares, we don't have to worry about weights. Because by issuing bonus shares, company is not even receiving a single rupee money. Correct or no? Yes. That is one approach. Better approach would be is, sir, will you directly get bonus shares or first you must already have original shares? Only if you have original shares, only if you have some shares already, then only you will get what? Bonus shares. Now I don't have any shares in Reliance. Reliance has come out with a bonus issue. Will I get bonus shares of Reliance or I will not get? Not get. Why? Bonus shares is given to the existing shareholders at free of cost. So only if you already have original shares, then only you will get what? Bonus shares. Hence a better linkage is, since bonus is linked with original, whatever weightage you are giving on original shares, same weightage you give on bonus shares. That is a better approach. Is this okay with you? These are not much tested at very finite level in your this thing, but this will have an impact in CA final. So better know this only. Keep this in mind. On original shares, if you assign 12/12 weightage, on original shares, if you are giving 12/12 weightage, bonus also 12/12. On original 10/12 means bonus also 10/12. Keep this in mind. It's not, I don't know, they may ask such questions here also, but so far it has not come. But if you know this sentence, you can avoid certain mistakes. Easy. Everybody good? This is one point we need to keep in mind. Whatever weightage on original, same weightage on bonus. Second point. Sir, whenever bonus issue has come, you'll have to restate last year ka EPS. Previous year EPS you need to restate. This is for comparison purpose. I had given you an example in regular class to prove why we do this. I'll not go into that for the time being. I'll just tell you what needs to be done. Whenever bonus shares has been issued, if bonus shares are issued in the current year, what we have to do? Not only you will have to calculate current year ka EPS, you need to recalculate. That's what we mean by restating. Restating is recalculating. Which year ka EPS? Last year ka EPS also you need to restate. And this is done for comparison purpose. If you remember the example, I told you 50%. Okay, now everybody, these are the two things you need to do. This is purely for the sake of comparison. One quick way to remember, one easy way, if you don't want logico, magico, just one quick way or quick fix to remember this is, whenever you are calculating EPS for the last year. Whenever you are calculating EPS for the last year. In which case? Bonus case. Simply think that, simply don't tell I told this. Okay, this is only for your easy remembrance sake. Think that bonus was issued in the last year and calculate. What did I say? Think that bonus shares was issued in the last year and do the calculation. That's all you need to do. I told you the logic, but I'll not go into logic. We'll not have time for every logic here. Okay. Same. This drama, what you're doing for bonus shares, we have to do the same drama for share splitting also. Share splitting means one share will become two shares. Same drama. Whether it is bonus or share split, we do the same drama. So 2 pointers for bonus. What is that? One, whatever weightage on original shares, same weightage for bonus. Second, restate previous year ka EPS. How do you restate? Simply think bonus was given in the last year and recalculate. That you'll get the right answer for the time being. Now let's do a thing. Let's go for one question just to have a little clarity. This is our class notes ka question. Similar question you might find in materials, ICA material also. Check here. Equity share capital of Aditya is 10 crore. It's not 10 crore. It is rupees 10 crore. That means what? This is number of shares or equity share capital. And what is the face value of each share? 10 rupees. That means how many shares? 10 crore divided by 10. We have 1 crore shares. Okay. During the year 13-14, company has issued bonus shares in what ratio? 1:1. So if you have 1 original shares, you will get how much bonus? 1 bonus. How many original shares we have? 1 crore share. So how many bonus will you get? 1 crore bonus shares also you will get, because the ratio is 1:1. Bonus came when? Which year? Current year. That is what? 2013-14. The net profit after tax for the year ended 31st March 2013, for the year ended 31st March 2014 is 8.5 crore and 11.5 crore. Sir, for EPS calculation, we need PATA, we need ESHA. We need ESH. How do you calculate ESH? PAT minus preference dividend. Have they given any preference dividend data here? If they don't give the data, preference dividend is 0. I mean, in these problems, PAT only will become ESH. PAT and ESH are same because preference dividend is not there. Okay, that they have given. EPS, they only calculated for 2 years, current year and last year. How much? 8.5, 5.75. You need to comment. Meaning you need to recalculate and check whether they've done it correctly or not. So let's recalculate. First, let's do it for current year. Current year is year ended 31st March 2014. How much is ESH for current year? 11.5 crore. And then we need one more data for EPS. What is that? Weights. Here we have 1 shares or 2 types. 1 original, 1 bonus. How many original shares we have? 1 crore. Did they say this original shares was issued during the year? Any data given or no data? I mean, what is the assumption? Original shares was there from the beginning. This 1 crore share was there from the beginning. So how much weightage? 12/12. If you have 1 crore original shares, how many bonus shares will you get? 1 crore. On original shares, how much weightage are you giving? 12/12. So on bonus also, how much weightage will you give? 12/12. So when you calculate, how much are you going to get? 2 crore. Any problem? How do you calculate EPS? ESH divided by weights. These two division will give you 5.75. How much did they calculate? 5.75. So looks like current year ka basic EPS what they have calculated is correct. Yes, sir. Now there are 2 pointers for bonus shares. What are those? 2 pointers I told you need to remember for bonus shares. 1, weights. Whatever weights on original shares, same weight on bonus shares. Second one, restate last year's EPS. By what thought process? By what thinking? Simply think bonus shares was issued in the last year and recalculate. Okay, last year how much is ESH? 8.5 crore. Last year how many shares, how many original shares you had? 1 crore. That's all or 1 plus 1 now? Now bonus shares also think that it came in the last year and calculate. This is for comparison purpose. So what about weights? If you want, you can write 1 crore into 12/12 into 1 crore into 12/12. If you're doing 12/12, then it's as good as saying you're doing nothing. No? So how many number of shares? How much weights? 2 crore. Calculate the EPS now. How much are you getting? 4.5. 8.25. Correct? Numbers looks good. Yes, everybody. How much did they report? They reported 8.5. That means they did not do the second part. What is that second part? Whenever bonus comes, you need to restate or recalculate last year's EPS. Was that done or not done? That's what you need to write. Hence, the treatment given by the company is following accounting standard 20 or violating. Violating. Like that, you will give a sentence and finish it off. That's it. This is one kind of question that can come. I feel in now and all, I think if at all they ask this question, it will come as an MCQ question. In case study somewhere, they will fit in, I think, 2 markers. Beyond that, doubtful. One type of problem done. Can we go on for the next? Okay, next type. Next is something called right shares. What? Right shares. Right shares also more or less has the same meaning. Right shares is also additional shares given to existing shareholders, but not for free, but at a discounted price. Compared to the market price, you will issue it at a lower price. Let's say face value of the share is 10. Face value of the share is 10. Market price is, let's say, 470. The stock exchange price of this particular share is how much? 470. Right shares will not be issued at 470. It will be issued at a lower price, at a discounted price. Let's say right shares was issued at 4. Instead of issuing it at market price, you will issue it at a little discount. Discount is not below face value. Okay, discount is from what perspective? Market value viewpoint. So shares cannot be issued at discount, no sir. What Companies Act says is you cannot issue shares below the face value. Here we are not issuing the shares below face value. Here we are giving discount from what? Market value perspective. Little lower than market value we are giving. That could be 400, 300, whatever. That only we refer to as what, sir? Right shares. Again, the meaning. What is the meaning? Right shares are additional shares given to existing shareholders at a discounted price compared to the market price. Okay, Ji. Sir, for bonus shares, we said there is no weightage wala drama. Correct now, because by issuing bonus shares, company is not receiving any money. Can we say the same thing for right shares? Is that statement holding good for right shares also? No. When it is right shares given at free of cost or company is collecting money? Company is collecting money. Yes or no? But appropriate money or little lesser money? Little lesser money. That means here weights ka drama should be ignored or correctly considered. The date of rights issue makes a lot of difference. Okay, people? Yes, sir. Correct. But what is the market price? 470 here. What is the right price? How much discount you gave? That 70 rupees you are issuing discount. No, that represents your bonus element. So right shares will also have an element of bonus. If you remember in regular class, I used to give shirt example. If any of you have taken class and remember. So there I had proved you that right shares also will have an element of bonus. Or simply I think making this example only you can include. The 70 companies collecting or not collecting? Not collecting. That represents what element? Bonus element. Now you tell me, if you are setting the paper, which question will you set? Bonus shares ka question or right shares ka? Right shares ka. Why? Right shares also has an element of bonus. So whatever you do for bonus has to be also done for rights also. That means this is a better way of testing the students because both concept gets tested. I told you one logic method of solving this where no formula is required. But I had also told you that ICI gives the right shares answers only in formula. So don't use the logic. So we'll have to remember a couple of formulas here and present the answer only in formula. Okay, without formula also you can get, but that method if you write, maybe you'll get 0 marks. Answer will match, but invigilator will not understand what the hell you did. So that way, I just told it for your reference, but these 2 formulas you need to remember for right shares. Okay, first formula that you need to remember here is something called theoretical X right price per share. Theoretical X right price per share given by the formula value of original shares plus value of right shares divided by number of existing shares plus number of right shares. Too much, sir. Very simple. Average price. It is simply average price. Sir, you had 1,000 shares. You had 1,000 shares. You purchased each of them by paying 15 rupees. How much? 15,000. You purchased 500 more shares by paying 20. You purchased 500 more shares by paying how much? 20. How much money? 10,000. So totally how many shares? 1,500. How much money? 25,000. What is the average price? For 1,500 shares, totally you are paying how much? 25,000. So that means if you want average price, 25,000 is a price for 1,500 shares. For one share, how much? 16.6. That's all is this formula. Okay, Naji. Now, how did you get this? Express this in formula. How did you get 25? Tell me. How did you get 25? 15 plus 10. How did you get 15? What is this? This is the value of what shares? Original shares. That's your numerator. First, you have to take value of the original shares. To this, what do we add? What is this now? Right shares. Right shares ka number or right shares ka value? So, first numerator is simply what? Value of original shares plus value of right shares. If you do that, you will get what? Total value. What do we need in the denominator? Total number. Now we have two shares. To get the total, what do we do? Add. What are those two? Value or number of shares before rights issue plus number of right shares. That's all we have to do. It is simply average price, but given through a fancy name called what? Theoretical X right price per share. Okay, tell me the formula once again. Let's see. How do you get theoretical X right price per share? Numerator is value. Denominator is number. We have one or two. Two. One is original, another one is right. First, you have to find value of original. Then add value of right divided by number of original shares plus number of right shares. That's your formula. Okay. This is your average price, or in AS20 terminology, theoretical X right price per share. Okay. Second one we just now discussed. Right shares also has an element of bonus. That in AS20 terminology, we call it as AF. AF as in adjustment factor. Adjustment factor. Instead of bonus element, they are calling it as adjustment factor. That's given by the formula. Value of the shares before the rights issue. Value of one share before the rights issue divided by theoretical X right price per share, which you computed above. Like let's say, sir, before the rights issue, the price of the one share was 30 rupees. Before rights issue, the market price of one share was how much? 30. Now you calculated average price, that we call it as what? Theoretical X right price per share. Let's say you got it to be 20. So calculate this. How much are you getting? 1.5. This 1.5 is your adjustment factor. Okay. If you want one quick way, easy way to remember this is, sir, adjustment factor should always be greater than 1. If you're getting any number lesser than 1, you have done some mistake. Don't even. That way you'll get to know whether what should be numerator, what should be denominator, if you're confused. Okay. So that is one quick fix. Adjustment factor should always be greater than 1. Why, sir? Sir, right shares has an element of bonus. That means one share is worth 1 now, or one share is worth more than 1. There is also bonus included, no? So one is not 1 now, one is little more than 1, maybe 1.05, 1.50, whatever. Adjustment factor is trying to capture bonus only, no? Hence, adjustment factor should always be greater than 1. That is your checkpoint before you proceed further. Okay, G. Now, if there is bonus, you know what to do. Bonus is always linked with what? Original shares. Correct. Now, how much ever weightage you are giving for original shares, same weightage should be given for bonus shares. Now, do that adjustment. That's all. That is what I've written here. This we'll learn it through numbers. Can we go ahead and test this particular in one other question? Okay. Come to question number 6. Again, class notes. Similar question you have in study material also. Compute basic EPS for Savita from the following data. Net profit for last year is 20 lakh. This year is 30 lakh. So why have they given for last year, sir? Whenever there is bonus, you have to restate last year ka EPS. So hence they have given you last year ka data. First, let's do it for the current year. Then let's worry about the previous year. So last year, sir, whenever they give you net profit in the problem, net profit always means PAT. in every case, in whichever chapter it is, doesn't matter. Net profit always means PAT. If preference dividend is not there, PAT only will become ish. Usually in these sort of problems, preference dividend, we don't see it. Not that it can't be included. Usually it is not included. But watch out. Whenever there is preference dividend, you'll have to do one adjustment. What adjustment is that? From PAT, you have to reduce preference dividend. Remind me once, for preference shares, there is one extra provision. I'll tell you. In case I don't, just remind me once after I finish all this. Okay. Number of shares outstanding prior to the rights issue. Before the rights issue, how many shares we had? 10 lakh shares. Now the company is coming out with a rights issue. What is that? 1 new shares for 4 outstanding. If you have 4 shares already, then you are eligible as a shareholder. You are eligible to buy how many right shares? If you have already 4, you can buy 1 more. That is the ratio. 1:4 or 4:1, depending on what you are interpreting. So if you have 4 shares, you can buy how many shares? 1 right shares. You have 4 shares or we have 10 lakh shares? If you have 10 lakh shares, how many right shares can you buy? 10 lakh into 1/4, which is how much? 2,50,000 shares. We don't have to calculate, they only given. That is 2,50,000. And what is the rights ka price? 20. If you want to buy 1 right share as a shareholder, how much you need to pay the company? 20 rupees. Last day for exercising the right is 31st March. If you want to buy the right shares as a shareholder, you'll have to buy it within what day? 31st March. That's the deadline. Fair rate of 1 share immediately prior to exercise of rights was 25. Before the rights issue, the market price or the fair price of 1 share was how much? 25. Calendar year is being followed. That means we are following Jan to December. Can we run through this question now? Okay, first, as I told, for right shares, 2 formulas. What's the first formula? Theoretical X right price per share. How do you calculate that? Well, take your calculator. Value of the original shares. How many original shares we have? 10 lakh. Okay. And what was the value of 1 share before rights issue? 25. So how much is the value? 10 lakh into 25. That is 2.5 crores. There are multiple ways to do it, but anyway, 2.5 crores. That's it, or plus value of right shares. How many right shares? 250. What is the value of 1 right shares? 20. So total value will be how much? 2,50,000 into 20. How much is it? 50 lakh. So value of original shares is 2.5 crore. Value of right shares is 50 lakh. Correct? So totally it is 3 crore. Divided by what? Number of original shares 10 lakh plus number of right shares, which is 2.5 lakh. When you do it, how much are you getting? 24. That's what you're getting. That way you can do it in total level. If you don't want to work with big number, there is another approach to calculate the same. Right shares is given in one ratio. No, what ratio? 1:4. That means you can take a simple number and work out. How many original shares you should have to get right shares? 4. What is the value of 1 original shares? 25. If you have 4 original shares, how many right shares can you buy? 1. And what is the value of 1 right shares? 20. Divided by number of original shares 4 plus number of right shares 1. This also you can calculate, you will get the same answer. Do it at total level or take this ratio and work it out, you will get the same answer. Whichever way you are comfortable, both we have applied in regular class. First formula ka numbers. Okay. Need a minute? All good? Okay, what's the second one? Adjustment factor. The trick is what? Number should be greater than 1. Sir, mathematically, if you want to get a number greater than 1, numerator has to be greater than denominator. Numerator ka value should be high. Then only you will get a number greater than 1. Okay, now, what is theoretical X right price per share? 24. What was the fair value of the share before the rights issue? 25. So what you will do? 24 by 25 or 25 by 24? 25 by 24. What is 25? Fair value of the share before the rights issue. That they also call it as come right price per share also. Divided by what? Theoretical X right price per share. That way you can construct your own formula. So 25 by 24, how much is that? 1.04. Are you getting a number greater than 1? Yes. Why are we getting a number greater than 1? Because right shares also has an element of bonus. This 0.04 is there, no? The 0.04 is there. No, that is the element of bonus. These are the compulsorily present in formula format only. Don't change. I think I've discussed logic method also in regular class. I told you also, don't use that. Use this only for exam. Yes, sir. Then lastly, EPS calculation. For EPS, we need two data. What are those? EPS, we need two data. Each and wins. Each and wins. First, let's do it for current year. Sir, do you know the each of the current year? For this year, how much is each? 30 lakhs. Okay, I've taken that. Okay, Naji. Careful here. Little careful here, everyone. Each is done. Now we want weights. Now, people, how many original shares we have? 10 lakh. Yes. We are doing cumulative approach here, okay? You know what is cumulative approach? Remember first example I showed? I'm using cumulative approach. How much original shares we have? 10 lakh. Now people, original ka weightage, bonus ka weightage, different or same? Original ka weightage, bonus ka weightage, different or same? Same. Now, 1 minute. Have you already captured bonus element? Yeah. 1.04. What is that 0.04? Bonus element. Correct? No. 1 is the original share. 0.04 is the bonus element. So total it will become 1.04. Agreed on. The weightage for these two will be different or same? Same. So what do you do? Listen here. How many original shares we have? 10 lakh. Do you want to calculate original ka weight separately, bonus ka weight separately, or can we do it together? Together, because anyway both has what weightage? Same weightage. So take this original shares and multiply 1.04. Multiply 1.04. Do that for me. 10 lakh into 1.04 you do. What are you going to get? 10 lakh, 40,000. That means what? 10 lakh is original share. 40,000 is bonus shares. Both put together, we are calculating weights. Agreed on. We are not finding bonus shares separately, but we are capturing the weights together. That is the essence of what? Adjustment factor. That is what adjustment factor is trying to do. Easy, everybody. So 10 lakh is original shares. The moment you multiply by adjustment factor, what are you going to get? Original shares plus bonus shares put together. Okay, ji. Pakka ji. That is right. Hang on. That is right. This is okay. This number is okay. 1 second. Hang on. Which are we following? April to March or calendar year? Calendar year. We are doing cumulative approach. When does the year start? 1st January. What is the last day for rights issue? 31st March. That means from 1st January till 31st March. How many months? Jan, Feb, March. So that means how will you assign? What will you assign? 3 by 12. Agreed on. 3 by 12. If you do this, you will get what? Original ka, bonus ka, weights. Under which approach? Cumulative approach. Easy. Everybody good? After 31st March, company will have 10 lakh shares or shares will increase? Shares will increase because how many right shares did you issue? You already captured this here. How many right shares have you issued? 2,50,000. That means from 1st April onwards, company will not have 10 lakh shares. They will have 12,50,000 shares. How? From 10 lakh shares, number of right shares is 2.5 lakh. No? So 10 lakh plus 2.5 lakh is how much? 12,50,000. Easy. From what date to what date? From what date to what date? From 31st March till end of the year. What is the year ending? 31st December. So count 31st March you ignore. Count from April. April, May, June, July, August, September, October, November, December. How many months? 9 months. That means what you will do? 9 by 12. This will give you your veins for the current year. This is your each, this is your veins. Dividing these two, you'll automatically get basic EPS. Got it. Not going there. Got it. Pakka, last bench. People are not doing. All okay, no? Okay. Sir, bonus is there. Bonus is there. Bonus only is getting captured through which element? Here through a fancy name. What is that fancy name? Adjustment factor. Whenever there is bonus, last year EPS you need to restate. Now let's calculate last year ka restated EPS. What is last year ka issue? 20 lakhs. That means we need last year ka veins also. Last year, how many shares we had? Only 10 lakh. Right shares came in current year. Right shares came in current year. Last year, how many original shares we had? 10 lakh. That's it, or we have to add bonus also. Bonus, did we calculate separately or through adjustment factor? So what you have to do now? Take last year ka number of shares and multiply by adjustment factor. Because the moment you multiply adjustment factor, what are you going to get? Original shares and bonus shares put together. Correct now? So when you do 10 lakh into 1.04, what are you going to get? 10 lakh 40,000. That is original plus bonus put together. Last year 10 lakh shares was there from the beginning till ending. So what is the weightage? 12 by 12. Yes, no. Right shares came only in the current year. Yes, no. Last year we had only original shares. How much? 10 lakh. So what is the weightage? 12 by 12. If last year on original shares, if you are giving 12 by 12 weightage, on bonus also 12 by 12. That's all it is. This is your ish, this is your veins. Dividing these two, you will get what? Restated last year ka basic EPS. We have done 3-4 questions in our regular class. So if you are doing it for the first time, I suggest use this and once work it out on your own. You'll be able to get it. You'll find 2-3 questions in ICA material only of this rights. Yes, sir, people. Yes, sir, people. Sir, if you want to express this step in numerical words, how can you express? Can you try? This one numerically in words, if you have to express, what you'll do? Just multiply what? Adjustment factor. That's what I've written in chart book. Multiply adjustment factor to existing shares before the rights issue. This way you will get the what? Original and bonus put together and then assign the weights. This multiplication you have to do it only in the current year or even last year. That's what I'm trying to express in words here. Now we have a number context to kind of connect with. That's it, sir. Rights also damar, sir. What, sir? Next concept, sir. Yes, sir. Okay. Next, sir, I told we report 2 types of EPS. BEPSO, DEPSO. BEPSO, DEPSO. BEPS means basic EPS. DEPS means diluted EPS. Now you are hostel students, some of you. I don't have to talk about dilution for you. You have dalu, sambaru. You know what you mean exactly by dilution, correct? No. Diluted EPS also same. The word dilution means increase or reduction. Dilution simply means reduction. We are talking about dilution from what? Of what? EPS. So if a EPS reduces due to a certain factor or due to some elements, that only we are calling it as what, sir? Diluted EPS. Okay, ji. Sir, why will EPS reduce, sir? Sir, EPS can reduce if you have something called POS. If you have something called POS, what is this, sir? Potential ordinary shares or potential equity shares. If you have something called potential ordinary shares or potential equity shares, then EPS may get reduced. That reduced EPS only we are calling it as what? Diluted EPS. That we are trying to calculate and trying to report it as depths. Okay. So we didn't understand, sir. Yeah. Sir, potential ordinary shares means they are those shares. Currently they are not equity shares. Currently they are not equity shares, but in future they may become equity shares. Currently they are not equity shares, but in future they may become equity shares. Example, convertible preference shares. Currently they are what? Preference shares. But when you convert, it will become equity shares. That only we call it as what? POS. Convertible debentures. Currently what are they? Debentures. But when you convert in future, they will become equity shares. Such instruments only we call it as what? POS. Due to this POS, how your EPS will get reduced. That only we are trying to calculate and show it as what? Depths. That means you are telling if POS is not there, is it not necessary to calculate depths, sir? Yes, sir. If POS is not there, depths ka separate calculation necessary, not necessary. If POS is not there means DEPSO both will be same. If there is no potential ordinary shares, then basic EPS, diluted EPS will be same. If you have POS, then you need to calculate DEPS also separately. That is what we are going to do. Can we run through that? Sir, how do you calculate DEPS now, sir? Sir, DEPS picks up from BEPS. DEPS starts from BEPS. BEPS ka formula chapandi. BEPS formula what? Issue by Waynes. Okay, so in order to calculate diluted EPS, what you will do is you already calculated each for basic EPS purpose. Take that, start with that. Take each for basic EPS purpose, add dilution adjustment. Similarly, denominator may take Waynes for basic EPS purpose and add what? Dilution adjustment. That means only extra fitting you need to worry about is what? Dilution adjustment. Dilution adjustment in numerator, dilution adjustment in denominator. That effect if you give, automatically you will be able to easily calculate DEPS. For your standard, this is all question up. Yeah. Can we take up one question just to understand this dilution adjustment a little better? Okay. Hanji, question. Question number 10 no from our class notes. Net profit for current year 85.5 lakh. Number of shares outstanding 20 lakh. Sir, if they don't give the dates, what is the assumption? If they don't give the dates, see, we want to calculate weights. If they don't give dates, what is the assumption? It was there from the beginning till the end. If you want to assign weights, you'll always assign what weights? 12 by 12. Or you can also ignore, because doing 12 by 12, not doing 12 by 12, effect is any which way. Same. Now, check this. Interest expense for the current year is how much? 6 lakh. Income tax rate 30%. Number of 8% convertible debentures. The moment convertible debentures comes, what do we call this as? POS, POS. Potential ordinary shares. Currently they are debentures, but in future they may become equity shares. So if POS is there, should we have to calculate debt separately? Is it required? Yes. How each debenture ka face value how much? 100. And how many such debentures we have? 1 lakh. And each debenture is convertible into how many equity shares? On one debenture, you have to give how many shares? 10 equity shares. And how many number of debentures we have? 1 lakh. So how many equity shares you'll have to give? 1 lakh into 10, which is 10 lakh equity shares you have to give, provided you convert. Okay, that's the thing. In fact, if you remember in regular class, I always used to tell, always check the interest calculation. Always check the interest calculation. Interest is always calculated on face value. How many debentures? 1 lakh. Each ka face value 100. Multiply. How much is that? 1 crore. 1 crore is the total face value of the debenture. What percentage interest it carries? 8%. So multiply by 8%. 8 lakh should be your interest expense. But the question says interest expense is only 6 lakh. What is the indication? This adjustment is not often tested, but you should always check in every question, because this will have an impact. What is that impact? Perfect. Sir, these debentures are not issued for whole year. These debentures are not issued for whole year, because if you had issued for whole year, interest expense should be how much? 8 lakh. Interest expense should be 8 lakh. Is it 8 lakh or actual interest is only 6? That means outstanding interest is 2 lakh. No, sir. No. Sir, if they had told interest paid 6 lakh, interest paid is 6 lakh, then you could have said interest expense is 8 lakh in that only. 6 lakh is paid and 2 lakh is outstanding. They did not say interest paid 6 lakh. What did they say? Interest expense itself for the current year is 6 lakh. Okay. That means what? Debentures are not issued for the entire 12 months in the current year. It has been issued somewhere during the year. So you'll have to prorate. How? Very simple. 8 lakh is the interest for how many months? 12 months. Is actual interest 8 lakh or only 6 lakh? If 6 lakh is the interest means how many months? Prorate. 8 lakh is the interest for 12 months. So 6 lakh is the interest for how many months? Multiply, how much are you going to get? 9. That means what? That means what? Debentures are issued in the current year only for 9. Sir, do not forget, EPS is not straightforward calculation. It is weight based calculation. If you have issued the debentures only for 9 months, then weightage also should be assigned only for 9 months. That is a hidden adjustment. In some question they ask. In majority of the question, the interest that you calculate and the interest that is given in the question will match. There will not be any difference. So you don't have to worry about this calculation. If it doesn't match, you need to prorate like this and check. Sometimes it is asked. Majority of the times they don't ask. Okay na ji, pakka na ji. You need few seconds to process. Good. Okay. Move forward. Compute BEPS, DEPS. BEPS is very straightforward because all the data is given. Sir, net profit means what? Net profit always means what? PAT. Is there any preference dividend here? If there is no preference dividend, PAT and EASH will be same. How much is EASH? 85 lakh 50,000. If you remember all basic EPS calculations, I used to present in this format. Same format I will use for revision purpose. First, basic EPS. What is the EASH given in the question? 85 lakh 50,000. What is the number of shares that is outstanding? 20 lakh. Date is not given. So worry about weights. If you want to assign weights, you will assign what? 12 by 12. Or simply you can write 20 lakh. Because even if you do 20 lakh into 12 by 12, you will still get what? 20 lakh. Yes, sir, G. This is EASH G. This is Wayne's G. These two division will give you what G? Basic EPS. Done now. Sir, POS will not be considered for basic EPS, sir. No. Basic EPS considers only existing equity shares. Basic EPS considers only existing shares. Diluted EPS considers existing and POS. Okay. So, is debentures already converted or it will get converted in future? It will get converted in future. So, that need not be brought in for basic EPS calculation. Okay, people. Now, how do you calculate depth side? How do you calculate diluted EPS? Take EASH for basic EPS purpose and add what? Dilution adjustment. Similarly, take Wayne's for basic EPS purpose and add what? Dilution adjustment. That means the only thing that we need to be aware of now is what? Dilution adjustment. Very straightforward, sir. What is this is? Due to POS, how your numerator and denominator is getting affected. That's all is dilution adjustment. Once again, due to POS, how your numerator, that is EASH, and how your denominator Wayne's is getting affected. That only we're calling it as dilution adjustment. First, let's maybe do it for denominator. Sir, if you convert, listen to this, if you convert debentures into equity shares today, what will happen? If you convert the debentures into equity shares today, what will happen? Number of equity shares will be same or it will increase? It will increase. Yes, sir. That only we are referring to as dilution adjustment. Here, check. How many debentures we have? 1 lakh. And one debenture is getting converted into how many shares? On one debenture, you will give how many equity shares? 10. On 1 lakh debentures, how many equity shares will you give? 1 lakh into 10, how much is that? 10 lakh. So, if you convert the debentures into equity shares today, how much extra shares you have to give? 10 lakh equity shares. Agreed? Yes, sir. Correct. But ignore the weights or consider the weights. Was this debenture issued for the whole of current year or only 9 months? That means will you take 10 lakh or 10 lakh into 9 by 12? 10 lakh into 9 by 12. Understood everybody? Because the debentures are issued only for 9 months. Correct. So how much will be the dilution adjustment? 7,50,000. Okay. That means what will be the variance for a diluted EPS purpose? 20 lakh plus 7,50,000. How much is that? 27,50,000. You are ready with this number. I'll give you a few seconds. You understood why 9 by 12? What is our 9 by 12 again? Why 9 by 12 again? The debentures are issued in the current year for whole year or only 9 months? 9 months. Hence 9 by 12. Hanji. Okay, now we'll have to calculate dilution adjustment on what? Each. If you don't want logic, simple formula is interest into 1 minus tax rate. No logic if you want me. Simply you have to do interest into 1 minus tax rate. First, let's do that. Then we will figure it out. I into 1 minus tax rate. I for interest. T for tax rate. How much is the interest expense in the current year? 6 lakh. That is your I. Into 1 minus tax rate. Is tax rate given to you in the question? How much? 30%. 30% in full number if you express, it will be 0.3. Do that. 6 lakh into 1 minus 0.3 if you do, you will get 4,20,000. Correct? This is your dilution adjustment. What is this? Very straightforward. In fact, I had given you one big tabular format. I had proved it to you. Now I don't have that much time. I'll try to explain it just through words. Sir, if you convert debentures into equity shares, if you convert that debentures into equity shares today, interest company has to pay or they will save. Interest the company will pay or they will save. Sir, one expense is getting decreased or one expense is getting saved means profit will be same or profit will increase. Profit will increase. That's all it is. Okay, now. Yes, sir. Sir, why did you take interest, sir? Why did you do 1 minus tax rate, sir? Sir, if profit increases, tax also will increase. Though you saved interest, 30% extra tax you have to pay to the government because profit increase. That means you are getting 100% benefit or only 70% benefit. 70% benefit because 30% who will take? Our Nirmala Sitharamanji. As what? Tax. So the benefit you are getting is not 100% but only 70%. That only is being expressed as 1 minus tax. Okay, Naji. So 6 lakh ka 70% if you do, obviously you will get 4,20,000. This is the interest you will save if you convert the debentures into equity shares. Okay. Sir, if profit increases means equity shareholders are sad or they are happy? They are happy. Why? Their earnings will increase. That means what should we do for this dilution adjustment? Minus or plus? So take the each for basic EPS purpose and add what? Dilution adjustment. You will get what? Debts ka each. Adding these two, you will get 89,70,000. This is the each. This is the variance for debts purpose. Divide the two and you will get what? These two you divide. What are you getting? 3.2. That's your diluted EPS. Okay, people. But there's one last point you need to check. Sir, dilution means increasing or reducing. So we are calculating diluted EPS. That means diluted EPS should be more than basic EPS or lesser than? Lesser than. Always check that. What is your basic EPS? 4.275. What is your diluted EPS? 3.26. That means it is diluted. Some cases you will get anti-dilutive. You will get anti-dilutive EPS. Such questions are not there in your intermaterial. It will come in your final material. There's something we'll have to do, some ranking order, which we will teach you in final. Is it okay? But do remember, if you get, this one I'll tell. Suppose by chance if you get 5. Suppose you get this number as 5. You will simply say it is anti-dilutive, not anti-da, right? Proper word, sir. You will write what? It is anti-dilutive and say it is not reported. Okay. Mostly it will not come, just saying. If I say a place that in this, mostly it will be dilutive only. Perfect. Now, what's your name, Macha? Ashik. Ashik is saying, sir, what if it is convertible preference share, sir? You guys tell me, sir. You guys answer this question. Instead of convertible debentures, if it is convertible preference shares, what will happen? Sir, interest is an expense. Interest is an expense. Due to that expense, tax will get impacted. When will you pay preference dividend? What is the order? From EBIT, if you reduce interest, you will get earnings before tax. From this, if you reduce tax, you will get earnings after tax. Then only you will pay what? Preference dividend. That means tax is already paid. Tax is already paid. Preference dividend, will it have any impact on tax or no impact? No impact. So if convertible preference shares is given to you in the problem, will you do interest into 1 minus tax rate or only preference dividend? Only preference dividend will be dilution adjustment. Got it? Perfect, everybody. And this will be same. There's no change. That's a good question. Thank you. You saved me one extra question. That explained, no. Sorted. We have done such question. We have done in regular class. Just that I didn't have time, so he made it cover. So awesome. Good for him. Thanks much, Ashik. Okay. Over, people. This one. Need more time. Need more time. Got it. What it? Got it, sir. Fully got it. Or fully bouncer. Okay, so this is over. What else is there? I think I I would like to do one more diluted EPS wala question, and one concept is there, one question is there, and over pa. Class already. This topic on okay. You have something called share warrants. Oh no, that is not there in a syllabus. Okay, no problem. I'll tell you this. Sir, it's a usual practice for the company to give shares to their employees, correct? It's a usual practice for the company to give shares to their employees. That only we used to call it as ESOP. Earlier, this was part of your inter-syllabus. Now, I don't know why they removed it. But you can't escape it. It is there in CA final as Ind AS 102. It will come. If it was there here only, it would have been better. But anyways, no problem. Leave. Now, this will have an impact. Now, people, when company is giving shares to their employees, when company is issuing shares to their employees, do you think they will issue the shares at market price? No, they will issue it at discounted price. And shares will be given immediately? No, company will tell the employees, you first work in my company for 5 years. Then I will give you shares. So what is the company telling? Company and employee have made an agreement. What agreement? Company will give shares at a discounted price to whom? Employees. When? Today or after? In future? Future. Future means it is basic EPS or POS? POS. So ESOP also is an example of what? POS. If such things are there, how EPS is going to get impacted is what we are trying to calculate. This question is also quite popular. There is a formula, there is logic, both the method works. Okay, I'll tell you like the logic method, easy to remember because formula may here and there you can do. Logic will work in every case. Look at this. PEPSU, DEPSU you need to calculate. Net profit for the period is 10 lakh. Take your calculator. Net profit for the period. Net profit means what, sir? PAT. If there is no preference dividend, PAT and each are same. How much is it? 10 lakh. Weighted average number of equity shares outstanding 4 lakh. Such a nice problem. Umma problem this is. Because they have only given weights. We have to calculate or given. How much is basic EPS then? Issue weights. Issue weights. How much is basic EPS? 10 lakh divided by 4 lakh, 2.5. Basic EPS one liner. Yes, sir. See, even if you don't know this question, at least put basic EPS, no? In 4 marks, you will get 1 mark. That's the difference between getting 39 and 40. 149 and 50. So just because one question is new, don't say go in the. Read the question once. Some part you may know. Some marks you may get. Invigilator may become Dharala Prabhu and say you have written something. Let me give him 1 mark. All that matters. Okay, don't completely skip anything. Okay, this is done. Next. So check. Weighted average number of equity shares under option. Which option are they talking about? ESOP. How much? 2 lakh. So totally you have given an option to the employee to buy how many shares? 2 lakh shares. Sir, the average price of the equity shares is how much? Average market price is 25. Do you think company will issue the shares to the employee at 25 or lesser? How much? Check. Exercise price of the option is only 20. Take your calculator, Guruji. How many shares are issued to employees? 2 lakh. That means how much money company will collect through this shares? Through this ESOP, total money, how much company will collect? 2 lakh shares, and on one share company will collect 20 rupees. So total proceeds is how much? 40 lakh. This is good, huh? Done, Ji. Now people, let's assume that you are not employee. You are not employee. You are a normal third party. You have how much money with you? 40 lakh. And you want to buy this company ka shares. You want to buy this company ka shares. What is the average price? What is the what is the average price of one share of this company? 25 rupees. Sir, you have 40 lakh rupees with you. You have 40 lakh rupees with you, and the price of one share is how much? 25 rupees. How many shares can you buy? You have 40 lakh rupees with you, and the price of one share is 25 means how many shares can you buy? Ideally, how many shares can you buy? 1,60,000. Correct? That means company should have given how many shares to their employees if they had issued the shares at a fair price? They should have issued only 1,60,000 shares. Correct? But did the company issue 1,60,000 shares to their employees or 2 lakh? 2 lakh. The number of shares actually issued under this option is 2 lakh. How much should have been issued? 160. How much is issued? 2 lakh. That means how much extra shares are given? 40,000. That means on this 40,000 shares, company collecting any money or no money? I mean, that only we're calling it as what? Options issued for nil consideration. Meaning shares are issued, consideration received or nil consideration. Meaning company has not received any money on how many shares? 40,000 shares. Correct? Now, how this 40,000 shares impact your EPS is what we are trying to calculate. Done now. Now, how this shares impacts your EPS is what we are trying to calculate. Do you agree with me? Okay. You already calculated basic EPS. To this, what you have to do? Simply add what? Dilution adjustment. Sir, has the employee already purchased the shares? Has the employee already purchased the shares or in future? Future. So that means, is there any dilution adjustment on each due to this? If it is convertible preference shares, convertible debentures, you have already accounted. You already account. For preference shares, you have already accounted dividend. Preference dividend. For debentures, you have already accounted interest. That you can save. For options, what have you accounted? Nothing. So what is the dilution adjustment of this on each? Nothing. Zero. Okay. But is there any dilution adjustment in number of shares? Yes. How many shares you have given for free? 40. This is the value or number? Number. Baines captures value or number only? Number. So that means the dilution adjustment is what? 40,000 shares. So what is the total Baines for debts purpose? 4 lakh plus 40,000, which is 4 lakh 40,000. This is your Ish. This is your Baines. Calculate debts. 2.27. Last May you will check. What you will check? Basic EPS and diluted EPS you will compare. Diluted EPS should be higher or lower than basic EPS? Lower. Is it lower? Yes. That means what? It is diluted. You don't have to comment that, but check always in the problem. Because if it is anti-dilutive, you will not report. In that case, what to do? I will tell you in the next problem. This is your debts. Another question which normally comes in the examination. Next. Okay. Now people, we've been talking about this anti-dilutive stuff, no? That anti-dilutive, a little jalak or little things we will see in this question number 15. What is it? Let's see. Exo Limited. Oh, what? What much? What jalak? I'm showing you. Yeah, XX Limited during the current. What do you mean by jalak? jalak उसको बोलो रे, jalak क्या मतलब होता है? तमिल में क्या बोलते रहे झलक को? तुझे नहीं पता रे, तमिल नहीं आता तुझे? Catch hold of him. Okay, झलक means what pa? How do you say झलक? Glimpse. தமிழ்ல எப்படி சொல்றது பாது? Glimpse என்ன சொல்லுவாங்க? Glimpse தான். Okay, question number 15 வாங்கோ. Okay. During the current year ended 31st March 20x1, the company has income from continuing ordinary operations how much? 240. Loss from discontinuing operation how much? 360. Accordingly, the net loss was 120. So there is something called continuing operations, discontinuing operation. AS 24 talks about it more. Small standard. Continuing operation means, is it possible that the company can have more than one division, more than one product? Yes, more than one department. The departments, the products, the division which the company is planning to continue is called continuing operation. The department, the product to the location which the company is planning to stop, is called what? Discontinuing operations. What Schedule 3 of Companies Act 2013 says is, profit or loss from discontinuing operation, profit or loss from continuing operation should be shown separately. You know, P&L order is there. Now, what is that P&L order? Revenue from operations, other income, all that you put, no, all that is shown only for continuing operations. Only for continuing operations, you give that breakup. If it is discontinuing operations, you only show three things. You don't have to give all that breakup. You will only show what? Three things. Profit before tax of discontinuing operation, tax of discontinuing operation, profit after tax of discontinuing operation. If you show P&L format, you will see this. Okay, it will be available. Okay, why did I say that? It's come here, that's the reason. Okay, so continuing operation means that which is getting continued. Discontinuing operation means that which is getting discontinued. From continuing operation, how much profit you made? 240. From discontinuing operation, you made profit or loss? How much loss? 360. That means net may company made profit or loss. From this division 240, from another division loss 360. Net may company reported a loss of how much? 160. That is your total operations. If you want, you can call it. Company has how many shares? 1000 shares. Date given or missing? Missing. We have to worry about weights or not required? Not required. How much POS? 200. Such nice problem. They have only given. We have to calculate or take this number. Take it. That's it. You are required to compute BEPSO, DEPSO. Very straightforward. Look at this. But whenever they have given data for CO, CO means continuing operation. DO means discontinuing operation. TO means total operations. Whenever they have given this, split it up. Split it up. Meaning calculate BEPSO, DEPSO of CO, DO, TO separately. CO, DO, TO separately. How? Don't freak out. Very nothing. BEPSO, DEPSO. Two components we need for BEPS. What are those? Each, weights. Do you know each? How much? Where? How much each? First we will calculate for what? Continuing operation. CO we will calculate. Do you know continuing operation ka profit or loss? From continuing operation, how much profit you made? 240,000. That I have ticked here. Okay, ji. Basic EPS considers POS or ignores? Ignores. So basic EPS, you will only take the actual outstanding shares. How much is that? 1000. Date not given. So weightage ka drama there or not there? Not there. That means what is your weighted average number of equity shares? 1000. 240 is each, 1000 is weights. Divide these two, you will get basic EPS. Okay, Naji. Every data they have only given. There's only a pointer you need to be aware. No calculation here. Easy, easy, easy. And now let's do the same calculation. BEPSO for which now? CO over. Next what? DO. DO means discontinuing operation. DO ka profit or loss? Loss. How much is that? Hey, yeah, here. DO ka loss is 3,60,000. Okay. Loss 3,60,000. Sir, for CO you will issue separate shares. For DO separate shares, or shares are issued at overall company level. Shares are always issued not division wise but at overall company level. That means number of shares will be same. How much is that? 1000 only, no change. I'll tell you. You are 2 steps ahead of me. I'm a little slow. Give me 1 minute. So far, good. Divide these two. How much is this? 360. Easy now. Positive or negative? Negative. CO over DO over. Next is what? TO. TO means total operations. From total operation at net level, mein company made a profit or they made loss? Net mein company made loss of 120. How many shares company still has? 1000. Calculate. How much is that? 120. This is a number. All the numbers were given. We just populated that. Okay, Naji. Now this is for BEPS. Next will be for what? DEPS. DEPS will only consider the actual shares or even POS. I mean, same data you need to calculate, but including POS. Will each change? No, it will be how much? Still what? 240. But the number of shares will be 1000 or there is POS also. How much POS is there? 200. That means the number of shares will become how much? 1200. Easy, Naji. Calculate the DEPS now for me. These two cut division. How much is that? 200. Yes. Forget the things I've written in bracket. Let's do the same thing for DO. Each is still how much? 360. But number of shares will be 1000 or add 200 POS. Add 200 POS, it will become 1200. Divide these two, you will get 300. But negative. Signs are important. 120 will change or same? Same. But number of shares will be 1000 or 1200? 200. That means this will be what? 100. Numbers are okay? All numbers. Now people, the provision of AS20, same for CA final also, what we say is anti-dilutive EPS are not reported. Anti-dilutive EPS are not reported. First, let's understand how it becomes anti-dilutive. Sir, if you are working from profit side, let's say basic EPS is 10. Basic EPS is 10. Diluted EPS should be more than 10 or less than 10? Less than 10. Correct, no? This should be, can I write it as number 8? Any number less than 8. Yes, sir. Sir, just give me again. AS20 ka heading, tell me once again. Earnings per share. It is not profit per share. What is the heading? Earnings per share. Earnings could be profit or earnings could be loss. If your earnings is positive, then you will call it as EPS. If your earnings by chance is loss, then we'll call it as loss per share. Whether it is profit or whether it is loss, you have to still report what? EPS. If it is profit, you will give EPS as a positive number. If it is loss, you will report EPS in brackets as a negative number. Both profit and loss should be reported. Done, Naji? Okay, if you are working from profit side, if this scenario plays out, what it is? Can you tell me? If this scenario plays out, if basic EPS is 10 and diluted EPS is 8, it is what? Dilutive or anti-dilutive? This is dilutive. Clear? Yes, G? Same, you're working from profit side. Basic EPS is 10. Basic EPS is 10. Diluted EPS is 12. What is this? The conclusion is this is anti-dilutive. Correct, G? This from which side? Oh? Profit side. Suppose you are working the same from what side? Loss side. Suppose basic EPS is negative 5. Basic EPS is negative 5. Diluted EPS is negative 7. Diluted EPS is negative 7. Then what is it? It is a dilutive. Sir, dilutive means profit should reduce, loss should increase. Dilutive means profit should reduce, loss should increase. Correct? Suppose ulta scenario plays out. Fourth case. Loss is 7, no? Basic ka loss is 7, no? Dilutive ka loss is, let's say, 10. Then it is what? Anti-dilutive. Understood? When it is dilutive, when it is... ulta. Reduction. Suppose this becomes minus 3. Okay, now? Then it is anti-dilutive. Agreed? Pakka? So, once again, I'm saying, from profit side if you are working, for it to be dilutive, depth should be lesser. But loss side if you are working means for it to be dilutive, loss should be more. Yes, then only it is dilutive. Any other case it becomes what? Anti-dilutive. Carefully observe this and tell me. Loss, this is loss. Basic EPS how much? Basic EPS is how much? Not positive. Negative 120. But depth is negative 100. Loss is reducing. Loss is reducing. Loss is reducing means dilutive or anti-dilutive. Loss is getting reduced means dilutive or anti-dilutive. Anti-dilutive. Everyone is clear with this? Anti-dilutive EPS, we report or don't report? Don't report. That's a provision. But for that, there is another connecting provision. What that says is, what AS 20 as well as CA final Ind AS 33, same provision, same thing they say is, sir, to check whether it is dilutive or anti-dilutive, we don't use total operation, we use continuing operation. We always check continuing operation ka data to find out whether an EPS is dilutive or anti-dilutive. So we don't take TO, we take what? CO. This we call it as control number. What do we call it as? Control number. Okay, Ji. Now check again comparison of CO you do. What is basic EPS? Negative or positive? That means it is loss or profit. Profit of basic EPS is 240 and dilutive is 200. That means it is anti-dilutive or dilutive. If this is dilutive, you don't have to worry about what these numbers are showing. You can report it. You can report it. So the checkpoint is not these two. The checkpoint is what? Continuing operations. We check continuing operations to see whether an EPS is dilutive or anti-dilutive. Why is that is? Sir, discontinued operation, are you planning to continue or are you planning to shut down? When you're planning to shut down, right, you may incur heavy losses, no, sir. It's quite natural because you have to fire employees. You have to tell no to your customers. So a lot of bad news will come in case of what? Discontinuing operation. So invariably companies will start suffering what? Loss. So hence the standard says this is anyway planning to discontinue and this will not give the accurate presentation of data. Hence you always check what for dilutive, anti-dilutive? Continuing operation. If continuing operation, if it is dilutive, should we have to worry about all this or simply give the data? Simply report the data. That's all it is. This is the last concept, last problem of this standard. Over. Thank you for your time and patience.